Alright, so now the next one that we are going to input is plants and machineries. That is plant, production machine, selling machine, packaging machine, and scaling machine. I'm going to combine everything together. So now, since they have the same rate of depreciation, so let's go back to QuickBook accounting. Then I will use my Control N again to create another chart of account, fixed assets. So continue. Alright, so now the first thing that I'm going to create will be the net book value for plants and machinery. So I will write plant and machine, plant and machine, machinery, NBV. Okay, so I'll create that, save and new. Then I'll start from plants. That's the first one. We have plants, which is Mechano. Okay, it's a sub account of our plant and machinery NBV. Okay, so while the cost is 30 million naira, so let's go back. We have 30 million. Okay, so the date as we are reporting, which is 31st of December 2024. Okay, then save and continue. The next asset is a production machine. So I can use cost, or let me use it like this. It's also a sub account of plant and machinery NBV, having a cost of 15 million naira. Okay, 31st 12 2024. So let me choose it from here. I'll later go for the settings, but let's just, okay, so I'll save and continue again. Now the next one is that of selling machine. Okay, so it's also a sub account of plant and machinery NBV with a cost value of 5 million naira. Date range we're reporting as at the 1st of December. So I'll save that, save and continue. The next one is that of packaging machine. Okay, it's also a sub account of plant and machinery NBV, having a cost value of 3 million naira. So our reporting date, that is 31st. Okay, so we save and continue. While the last one here is the scaling machine. So let me go back to my QuickBook. Scaling machine. That is scaling machine. It's also a sub account of plant and machinery NBV. So with a cost value of 1.5 million naira. Okay, so I'll select this then, while I'll close that. So now when we look at this, it means that we are having the plants and the machinery NBV, which is 51,800,000, which is the same as the sum of all these plants and the machinery. But we need to consider the Accum depreciation. Let's go back to that question. The Accum depreciation for our plant and the machinery. Okay, so now let's consider that. I'll go back to this, then I'll press my Ctrl N again under fixed assets, then I'll type Accum depreciation for plants and machinery. For plants and machine. So I'll close that jacket. Then it's also a sub account for NBV. So for plant and machinery NBV. So I'll just go back to this. Then we'll start with negative. Remember, since it is Accum depreciation. So let's go back to this. Now we need to add this Accum depreciation together from 6 million, 3 million, 1 million, 600 and 300. So that will be 10,900,000. That is the Accum depreciation for this plant and the machinery. So we go back to our QuickBook, then we'll type 10,900,000. 10,900,000. So that's December 31st, 2024. Then we'll save and close. So when we look at our net book value for plant and machinery now is now 40,900,000 after we considered Accum depreciation for plant and machinery. Let's check our trial balance. Here's the trial balance. Let me select total. So now we can see that here is the list of assets, why this is our Accum depreciation. So you can see that Accum depreciation, land and building, Accum depreciation, plant and machinery. Let's look at our balance sheet. Here is the balance sheet. You can see that land and building, Accum depreciation. Okay, plant and machinery, we have Accum depreciation for the plant and machinery, which is 10,900,000. Why the net book value is 40,900,000.